All right, good afternoon, everybody. Event Trader here. Just getting ready to take a quick look around at what we should be expecting over the next 18 hours. I'm going to be joined with Scott here, and we're going to go through some of the earnings that I posted up there, just some quick thoughts on them, and then go through with Scott and take a look at the charts. I'm going to cover up some of the macro and what to expect, but overall a relatively slow day. One small bit of house cleaning here. My long in the S&P, my plan right now is to take off another piece for about a 7-point gain here, and then I'm going to move my stops to the 2810 entry point and keep that on the remaining half position overnight. Basically, it's about a quarter size position overall at this point, but that'll lock in some profits for 7 and 8 point gains. Not the greatest trade in the world, but at least it's profitable, and putting those stops in at the entry will lock in those profits. That's one of the nice things about futures is the liquidity. I don't have to worry about the stops getting jumped or anything along those lines. So one thing I would also note too, I was encouraged to see that the market held up pretty well despite what one could see as relatively hawkish language in that beige book. Perhaps it's being overridden by the Jerome Powell testimony, but obviously some of the comments that we're seeing in there on the producer prices and the costs and the rise of inflation are worth keeping an eye on. The economy continues to perform well, so obviously a plus for the markets there, but overall closing near the highs, it's not a bad sign, and willing to allow a small piece of that S&P long that I have in the futures to go overnight. Taking a look on the macro side, as you can see in my comment, there's not a lot going on over the next 18 hours. You never know when that headline is going to come out to shake up things, and of course Steve Bannon's going to be speaking later on CNBC. I'm not sure how much of an influence he would have over the markets at this point, but something to keep an eye out on, and headline risk, as always, we need to watch. But in the U.S., we got the initial claims data out at 8:30. We're also going to have the July Philadelphia Fed survey due out at 8:30. The Empire number earlier in the week was solid, so look, had a small beat there, so looking to see if the Philly Fed can follow up, but obviously would be a positive for the markets if we see sentiment data remain strong. Then we got the June leading indicators number out at 10 a.m. Briefing.com consensus stands at plus 0.4%, and then we will get our natural gas inventories at 10:30. Looking on the international side, one thing I do not have in there that I should have added was we got an EU-China summit on trade. I don't know if any deals are going to be announced, but want to keep that in mind. We saw the EU already strike a deal with Japan, and now they're on to China, and they're actually going to be in the U.S. next week. Jean-Claude Juncker, who heads up the EU discussions on trade, will be in to meet with the Trump administration. So some positive comments from Larry Kudlow earlier in the day with regards to the fact that the markets could be pleasantly surprised by a deal with Europe. So we definitely want to keep an eye out from their visit over to the States here. But the only other items of note on the international front is the Australia jobs report out tonight. There's also going to be a quarterly business report due. They're both out at 9:30 p.m. Then we'll get some UK retail sales at 4:30. The pound's certainly been weak as of late, so miss here could lead to a little bit further concern around sterling. And then we got a Spanish 10-year bond auction, but not expecting that to have a major impact on the markets. But really the key for the markets is going to be these earnings reports, and we have a list that we're going to take a look at here. Just waiting for Scott to jump in to join us.
I'm here, Gav.
Hey Scott, how are you doing today?
I'm okay. It's hump day.
Yeah. Any early thoughts on the markets here?
I'm just surprised it's holding up as well as it is, to tell you the truth. I figured you take a look at something. Let's take a look at the Dow here, all right, for the last couple of sessions. just can't seem to really maintain any sort of pressure. I mean, there's this consistent underlying bid in the market, just lifting things higher here. And I don't mean to complain about that, but just a little bit too short-term overbought for my taste. I would really rather see a pullback that can be maintained for at least one day, maybe 2 days. Nothing crazy, just something to reset the charts rather than feeling the need to chase stocks, higher after a significant run-up last week and then more this week. So, anyway.
Yeah, no, I mean, that's kind of why I've been leaning long the last 2 days. I just posted that taking a piece off is the fact that there's every reason for the market to roll over, yet we haven't.
Yeah.
And that's kind of been what, and then, with financials finally getting into gear, I thought that, perhaps that is what the market was missing, to finally get over that 2,800 level with some sort of conviction. But, we still got a lot of earnings to come out, and I'll be curious to see the market reaction. So let's start going through some of these, take a look at some of the charts, and we could kind of expand upon the talk we had earlier off air on steel plays. I'm sure people would be curious to hear some of the thoughts that you're seeing in terms of the charts. Mm-hmm. But first up that we want to take a look at is Alcoa, and curious to see if you pull up a 5-minute chart, Scott, you can see that there's some people a little nervous about this ahead of the earnings, it would appear. Certainly want to keep an eye out on. And for a little bit more detail, obviously I wanted to keep my post in line a little bit, make it a little bit more readable for people. But we do have earnings previews for a number of these companies. I'll point them out, AA being one. And with that, one of the things that I think we're going to be curious to see is whether obviously the tariffs and how that's impacting the action here. The stock was holding near its 200-day moving average at 48.64 at the time of this writing, but since then it's slipped down a little bit below that. The stock is down about 20% from its last earnings report when it hit a 52-week high shortly afterwards. But we certainly want to keep an eye out on its forward-looking guidance around the aluminum demand, which stands right now at plus 4.5 to 5.5%. But Scott, what are you looking at in this chart?
Yeah, I mean, not too much going on. It's been an underperformer, like you said, since that last earnings report. Just struggling right there with the 200-day, 50-day moving average resistance around $48. So that's going to be a key inflection point that it's going to have to get above. It definitely does tend to gap in response to earnings. If I just go back every 3 months, I see there's a pretty significant gap in response to earnings. So at the very least, I don't think it's going to be staying around this $47, $48 area come tomorrow. It's going to be probably above 50, or it's going to be breaking down below 46.
All right. Moving on to the next name, we're going to take a look at American Express. This is one that, we had talked about last quarter, Scott, where it was able to see a nice pop from that 93 level up towards 100, but simply hasn't really been able to get above that level. The stock hit, I believe, it was an all-time high. This would have been, I'll just move back in. Here, back
in May
22nd,
yep,
when it hit 103.24.
Yep.
But this is one, Scott, I think when you're looking at it on a weekly chart, that falls into your wheelhouse in terms of liking it long, just because it had that nice upward trend going from early 2016 into the beginning of 2018. And since then, we've really seen it just kind of chop around at that 90 to 100 level. It's trading at 102.58, just a biscuit shy of that all-time high. And expectations are certainly good for American Express. They need to beat on the bottom line because the general view is that the provisions should be running a little bit lower and that they should be hitting their revenue growth target of at least 8% in 2018. We'll also have to keep an eye out on that FY EPS guidance, which is in the 690 to 730 range. So strong quarter here, Scott. Do you like that as a potential breakout candidate?
Of course I do. And remind me, Gavin, what exactly is the value of a biscuit when you say it's only a biscuit?
Well, in this case, it would be about 60 cents.
right. Yeah, I love all-time highs, and this one's just been on a stellar uptrend for quite some time. Year to date, it's been extremely choppy, but overall, I just carved out this. It's been carving out, I should say, this almost ascending triangle pattern the last 6 months or so. Definitely got some key resistance up here, 102, 103, which it is challenging, but path of least resistance at this stage, I would think, is to the upside into all-time high territory. I mean, there's only so many times you got to hit that same level until you eventually bust through. If it does gap down a little bit, you do have this potential multi-month uptrend in effect right around the 200-day moving averages, which comes into play. Looks like around $97 or so. So we'll see how it plays out. But I like this one on the long side for sure.
All right, next up we're going to move to Crown Castle. Ticker symbol CCI. Scott, we were talking about this on Friday, and this is one of those tower plays. I've got the AMT long. I posted some thoughts on AMT because there's some concerns I do have around it. One of the things I liked about AMT was that it had the best debt out of all the towers, and at the time we were seeing a rise in interest rates, which had debts front and center. But they also have some issues with the India unit and concerns about a stronger dollar. CCI, though, does not have those same concerns, and they're also expanding into that fiber and the small cell for the 5G that we were talking about on Friday afternoon. So this is another one, kind of been trading in a relatively tight range, that 102 to 112 area, basically since last November. The all-time high on this one is 110.65, which was hit in early November of 2017. It's edging up towards those levels into tonight's report, but certainly want to keep a close eye to see if they could get above that 112 level, and commentary around that small cell and whether or not it's having an impact on the top and bottom line will certainly be of interest. But one that's recently gotten above its 200-day moving average and seen a bit of a 4% extension over that. Scott, what are you looking at in this chart?
Yeah, over the last, 3 weeks or so, there's been some pretty hefty accumulation in this name. I like it. Like you said, it's got to get back above that 112 level. From what I could tell, it's probably going to do it unless it disappoints significantly with the earnings report. If it gets through 112, you're going back up to all-time highs right around that 115 area.
All right, so we're looking at a couple of names that were near their all-time highs. Now we're going to hit one that's been treading water barely a little bit, and on the weaker side, and that's eBay, ticker symbol EBAY, of course. There's been some concerns as it's fallen below its 200-day moving average about a slowdown in its gross merchandise value. I've seen a pickup from competition in the space there. One of the key things that's been followed is there is going to be the discussion around linearity in the quarter, and basically the company was looking at a weak April, but but channel checks were looking at a pickup in May and June, which certainly could bode well for the name if it's able to beat and then also guide higher. The company should be guiding for Q3 and FY18 in its press release too, trading right around its 50-day moving average, but certainly some cause for concern, and it still remains in the downward trend ever since it hit its 52-week high, which would have been back in early February when it touched 46.99 back on February 1st. Scott, what levels are you looking at in terms of trying to confirm a breakout from this downside trend that we're seeing it in?
Yeah, it's got to definitely fight its way through the 38 area. I say if it starts clearing 39, which is going to be around the 200-day moving average and that downtrend line off the year-to-date highs, starts trading up to 39s, you got a potential reversal of momentum, which could take it back up towards that $41, $42 area. But overall, that the burden of proof is on buyers right here at this stage. They got to really kind of break this downward vibe that's been going on here. Otherwise, if the report's not good and sellers take hold of this thing, I would suspect your first support's at 36, near recent lows, but then you're looking at multi-month support down around 34.
All right, moving to the next one, another weaker tech name, International Business Machines. Ticker symbol, of course, is IBM. This one has just been seeing some pretty big dips on earnings the last two quarters. Had that nice surprise back in October 2017, which you could. You'll be able to see on the chart here in a second. But big pop up there, and people were hoping that maybe the turnaround was in play, but that has not come to fruition, and now we're seeing it battling to hold up that 140 level. And there continues to be caution around this stock. As the early whispers is that the company might need to lower its Q3 and guide Q3 below consensus and tweak its FY18 EPS guidance lower. It's currently at least 1380 for FY18. So Scott, what are you looking at? What does this need to hold in order to get you intrigued on the long side, or you just see this as a short with some further downside action?
That's an interesting call. So, I mean, obviously it's been out of favor. It has held that 140 support level over the last year or so. It probed it, but then it quickly attracted bids soon after. So that's going to be your main level to watch for if things are weak. You don't really want it cracking back underneath the 140 level to re-challenge those lows. Overall, I would actually guess that this doesn't get much of a reaction to earnings. Just based upon the pattern that I could see here, if it really needs to get back above this recent resistance level around 147 to really kind of spark some interest, maybe get back towards last April's bearish gap around the 152 area. But overall, I mean, this is just a sit on your hands type of stock. If it can't bust out between 140 and 147, there's nothing to do here.
All right. Next up, we're going to take a look at United Rental, ticker symbol URI, and I threw this one on just because, it's certainly been a weaker name, another one of those below its 200-day moving average and in a long downward trend since hitting a 52-week high. This one happened to come back in on March 13th when it hit 190.74. But one of the things that I thought was interesting about this was that a lot of people believe that the estimates could be low on this one. So, obviously it's a must-beat in that scenario. However, that headline could look a lot better, too, in this same scenario, which could lead us up to a test that 50-day in the 159 area or the 200-day at 163. Certainly some heavy resistance above, but that low bar should make for an interesting report and reaction.
Yeah, for sure. Like you said, it's got to get back above all this resistance around 160, 163. You do have some pretty key support down here around the 140. Let's go with 143, 145 vicinity, and that's going to be a must-hold for this stock. Otherwise, you're looking at a 140 level, and then if that cracks 140, you can have some serious downside, maybe down to like the 127 spot.
All right. Next up, we're going to take a look at med device play Danaher, ticker symbol DHR. It came off a really nice beat and raise in Q1, but the stock's still down 4% since that, basically consolidating around that 100 level. Some similarities in the charts to American Express. I don't know if it's as defined of a consolidation pattern as you'd like to see, Scott, and I guess that's my primary question for you on this name.
Yeah, just remind me, they're industrial. What do they make? Do you know?
Medical devices. I don't know the exact devices that they do, but so they're in that IBB space, basically.
Yeah, I don't trade this one too often. Real choppy consolidative action year to date. Even more narrowing as of late these last few weeks here. So usually when you get this narrowing range, especially in higher price stocks, you can expect some sort of explosion in volatility to come about here, and earnings look like a good catalyst for that to happen. So if this thing can start clearing 101, I would suspect that it's going to start challenging the year-to-date highs around 104. And if it starts breaking down, say below, let's go with 97, which is right around the 200-day moving average, you you could have a pretty significant drop, say down to the year-to-date lows around 92. So pretty much anybody's ball game at this stage here, but you are looking for some sort of significant move away from this multi-week consolidation that's been going on.
All right. Next up, we have Nucor, which is a steel play that we were teasing a little bit earlier. I know, Scott, when we were first talking about it, it sounded to me like you were kind of leaning a little bit more on the long side for these names, given the charts.
Yep.
There's certainly a lot of outliers that are going to be involved and a lot of fundamental risk in the steel names just because of those tariffs that are going on. Nucor, Rob Reed did a really nice write-up for them. You guys all know Robert for his work on the GrowX and everything, but he originally cut his teeth in on the steel names, so he's got a pretty fair idea on them, and that's going to be one area that we're going to have in focus, and maybe we can even bring him on tomorrow for a discussion of Nucor and the other steel names, as there should be plenty of volatility around them. One of the key things for Nucor is that their end markets are the auto, appliance, and construction area. And what we're going to want to keep a close eye on is whether or not they've been able to pass on some of the higher costs that we're seeing, and if they have some higher pricing power to push on to their customers. And that'll be really reflected in their gross margins and in their earnings per share. So we certainly want to see how they're performing on the bottom line. Revs naturally will be important, and we're going to want to take a closer look at that pricing commentary in the press release. But for me, I'm kind of on the sidelines until I see some of these earnings and how they react. But Scott, what was it that you were seeing that was interesting to you in the steel names on the long side, potentially on a technical basis?
Yeah, so if you look at this year-to-date chart here, it's been a pretty sloppy range overall, but I just kind of like the fact that it kept bouncing off this psychological round number of $60 multiple times, and it also started to react pretty positively to the 200-day moving average, which has been slightly on the rise here. So at the very least, I felt like there's some pretty hefty accumulation going on at these key technical levels down here. Obviously, they're selling into strength up above $68, so that's going to be a key resistance level for this stock if it does start to move higher. But overall, I thought this was somewhat of a under-accumulation stock. Also, with the same thing, you said there's worries around this the steel sector. Well, if there's so many worries, they would be selling these things off, and they'd all be in significant downtrends. And so I feel like the worries really aren't there. They're not priced into price action, so I kind of feel like they're set up to go higher.
Out of curiosity, what chart do you like the best out of these steel names?
That was a good call. So I was thinking about actually going after U.S. Steel because I felt like the resistance level was right there around $38, and that would just be a nice clean breakout. And I do believe that whereas fundamentally I've heard Rob Reed talk multiple times, I think, about Steel Dynamics or even Schnitzner Steel. But then even going to a lower priced one, AKS, this thing tends to move pretty well, and this one's starting to break out already. Outside the fact that it's already has a 200-day moving average there, it's breaking out today to about a 4-month high here, right over that 480, 490 level. So there's a couple good-looking stocks out there overall. Nucor's not really, a real big mover, fast mover, but I would say off the bat I'd go after U.S. Steel, and then maybe I'd look at this low-price one, AK Steel.
All right. Next up, we're going to take a look at a staple, and it's Philip Morris, which has been just kind of treading along in the 78 to 80 area for the most part since its last earnings. Stock got hit, of course, with the rest of the staples due to some of those rising cost commentaries that we had seen. Also a little bit of a slowdown there for PM. This is the 4th largest weighting in the XLP. I want to keep an eye out on those Q2 gross margin expectations as a read for the staple sector. Expectations are for approximately 63.5%, and the EBITDA number as well, which is expected to come around $3.1 billion. but it is putting in a little bit of a bottoming pattern here. We've seen a pickup in the XLP, but obviously Philip Morris has not been jumping in there. Scott, you see anything in this?
Yeah, what's the matter with all these millennials? Is smoking not cool anymore?
Yeah, I don't know. We got to get it back in. You'd think Mad Men would have driven some people back to the habit.
All the cool kids smoked growing up when I was there, you know.
Yep.
Hence, I never smoked. So, no, anyway, yeah, this thing just got absolutely destroyed here the last, what is this, almost a year right now, sitting off those highs about, 36%. I believe the dividend is still stable, and I think that's really kind of the only thing that's holding this thing up still, preventing it from collapsing below this multi-year support level right around the $75 level. So that's really going to be the key thing here, whether I think it's the dividend. It's just pretty fat, I think.
The yield's 5.5.
It's fading out there, Gav, a little bit. Just speak up.
The yield's 5.5.
5.54, yeah. So I'd be more curious to see what they say about that dividend, because I think if they cut that in any degree, that's going to be a game changer for sure.
Yeah. Or get a Kardashian to start smoking on their Instagram account. Perhaps that could bring it back into vogue or something, right?
Maybe their client relations should be hitting her up, yeah, right?
There you go.
Yeah.
All right, next up, we're going to take a look at, this is one of the more interesting names from my perspective. That's SAP, which is, of course, the German software company. It's going to give us a good read on the cloud space, but I'm also just curious to see their commentary around the global markets, given the fact that tech's really kind of been at the focus of a lot of the early talk with China and U.S. on the trade war front. SAP is taking advantage of that. That's been one of the German companies that's recently announced a new deal in China. So recently hit a 52-week high of 121.94 set back on June 14th. We have the stock testing right around that area. Actually, I think it might even be. It hit an all-time high just a little bit ago. Mm-hmm. So obviously, some people upbeat about this one ahead of tomorrow's earnings. And again, we've seen a little bit of an early divergence, and it's still way too early to call this the theme for Q2. But of the European tech names outperforming some of the U.S. counterparts, at least from what we saw with Netflix, and then the TXN guidance, basically just using that as the reasoning early on. But there was a few European names out overnight that had some good earnings on the tech side. So this is going to be the latest one, big cloud place, so we're going to be looking in at CRM and Oracle as well for any reaction. But Scott, you like this chart?
Yeah, of course I do. All-time highs, big uptrend. It is an ADR, so it tends to gap around a little bit. If it doesn't go to the upside, well, then you still have a pretty solid uptrend at multiple support levels to consider buying on weakness.
All right, and finally, we're running up close to the bell here, so we're just going to touch. We'll skip over Travelers. We could come back and address that tomorrow if that becomes a story. But I wanted to take a look at UNP because that transportation space has certainly been hot as of late, and just want to keep an eye on this one here. It recently bounced off its 100-day moving average. The CSX results, of course, earlier in the week bode well for UNP, and it's not all that far away from its 52-week high. We saw CSX make a nice rally into its 52-week high following earnings. The company did provide guidance on May 31st, so maybe a little bit less of a surprise here at the moment, but one that we want to keep an eye out on.
Yeah, for sure. So here's a chart of the Dow Jones Railroad Index, and it looks great. I mean, it's been consolidating the last couple of weeks along its highs here, and then with the positive response in CSX earnings today, and then NSC, Norfolk Southern, is also up near its highs. UNP is a little bit of a laggard here, but strong group, strong sector, strong space. IYT looked like it was potentially rolling over, but then turned a whole corner here, so you have what looked bearish is now turning around. So I'm going to give it the benefit of the doubt and say that it kind of has more upside potential. Key support right here around 139, 140.
All right. Just looking at feedback to somebody who's asking about PSXP. I'll definitely take a look at that. We're bumping up into earnings, so we're going to have a bunch flipping out. Not sure when they're reporting, but I'll do my best to get some thoughts up on that ahead of their earnings report. So thanks for the sub who wrote in about that. And there we go with the bell. So
right.
we're gonna jump over and start taking a look at these earnings. Scott, you want to take them through the close of the day, and I'll jump on if anything of interest pops out.
No problem. All right. All right, so we got the Dow looking like it's going to close up around 81 points, give or take. S&P is up approximately 6. The Nasdaq comp is looking pretty much flat on the session. It's slightly negative, somewhat of a lagger today, but not in any sort of heavy distribution type of means. Interesting today to see small caps and mid caps make a little bit of a comeback, and I want to just show those charts quick. They have been lagging over the last couple of sessions here, and kind of setting up for this potentially bullish pullback pattern. Off that they stole that around their June high. Here's the mid caps MDY, and they could be potentially setting up for a breakout into higher ground. Take a look over at the IWM. Kind of had somewhat of a similar price pattern there. It stalled out against the June highs, and it's just kind of carving out this somewhat of a bullish flag pattern in here in July. So again, my logic is the reason why these things have been out of favor or just kind of pulling back a little bit is because we've seen so many earning reports from the larger caps, especially from those financials and banks and a few other names. So I think that's one of the main reasons why they've just been kind of out of favor, for now. But as I've said always, I'd make the comparison to larger caps and small caps and to the military. The larger caps being the generals, the smaller caps being the infantry. It looks like the generals or the larger caps are running into battle, and the infantry or the small caps are kind of hesitant to follow right now. That could mean that the large caps get slaughtered, or what it means is that the infantry will eventually follow their lead and move higher. And right now I think I'm leaning a little bit towards the latter side, where it looks like mid caps and small caps are set up to follow the lead of larger caps.
Hey, Scott.
Yeah.
Just breaking in CP, Canadian Pacific. Nice little 5-cent beat on revs, and their operating ratio, which we saw earlier with CSX, is lower, which is positive for them. So another good rail report here. So want to keep an eye on CP to see if it follows suit. Breaking out a little bit above that 188 area today. All-time high, or the 52-week high was 196, set back on June 14th.
Cool. Yeah, so we had transportation stocks, pretty strong today. Obviously, that was a big boost from United Airlines, UAL, which had a monster reaction to its earnings response, up about 9%, which brought it right up to the year-to-date Jan high. So pretty big move there. That busted out a whole bunch of other airlines. You got Delta that gapped up higher today. American Airlines, not too much of a reaction, and we've stated this one before, how this one is probably one of the worst performing in the group and is probably an avoid. Something like Southwest Airlines, also a pretty weak performer, but that did make that breakout over that $53 resistance area that we had highlighted yesterday. And JetBlue was another interesting one too, kind of a sideways consolidation range that it's trying to break out of here.
Hey, Scott, IBM breaking higher here. Nice 8-cent beat on the bottom line. Taking a quick look for revenues here. 30. That's the first half. Just looking for the revenue number. $20 billion on revs, which beat the $19.8 billion expectations. Perhaps most importantly, they are reaffirming their EPS guidance. We discussed about that there was a concern that they could lower that, but they continue to expect to see EPS of at least $13.80, which is in line. They also are reaffirming their free cash flow of approximately $12 billion for FY18. Do not see Q3 earnings here. So we'll continue to take a look out on this, but probably couched as a better than feared for IBM. And, that's a positive for the name. We talked about how I was trying to find a base in that 140 area, and this should help give it a boost. And, if we could get it above that 147 level,
Yeah, that's
it. Make that run towards the 100-day at 148, and then you got the 200-day at 151. So we could see a little bit of a squeeze over here. So just a positive report there. Now we're going to jump over. American Express is out. Give me 2 seconds to take a look at. But if you want to take a look at that IBM chart, Scott, for people.
Yeah, so IBM, we've highlighted this just a little while ago. Just this multi-week resistance level. This is on a 60-minute time frame, in case you're getting confused. But it's right around 147. So it's really got to bust out above 148 in order to get some more upside potential. I'll switch over to a daily here real quick. You can see that was the 147 level that acted as prior support a couple months ago, and now it's acting as current resistance. So it really kind of needs to pop up over that 147, 148 area in order to bring back the 150s. Otherwise, you're looking down at maybe a potential retest of the lows near 140.
All right, Scott, AXP selling off a little bit here. Rev's a little light. And then the earnings per share beat by 3 cents, but recall we were talking about expectations were for them to see a little bit more of a beat here. They are raising their 2018 revenue expectations, though, to at least 9%. Their prior guidance was at least 8%. They are reaffirming their full-year EPS guidance, where people were probably looking for a raise there, but certainly a bit of a sell the news reaction to AXP. The report overall doesn't look too bad, but again, we're talking about this needing that a little bit of juice just to get it above to fresh all-time highs and break it out to the next level. And this report's a little bit more pedestrian and in line, and certainly enough, not enough to provide that boost at the moment. So we'll keep this one on. This could potentially be a buy the dip candidate, in my opinion, but the Q2 results falling a little short of some higher expectations.
Yeah, definitely under pressure here. Just broke underneath the $100 mark. Looks like it might have potential to bounce off this 99 area. Again, it's a Wild West, this after-hours trading stuff. Even if you got in there, you're going to immediately lose on 30, 40 cents for slippage purposes. Look at this, it's already back over 150 as I was talking. So, key support right there around 99. We'll see what happens tomorrow. Like I said, Wild West trading in the after hours. This thing could wind up opening up around 103 tomorrow morning.
Yeah, we've talked about this in the past, and as sexy as it is to get in there early and see a stock move 12% in your favor because you guessed right, that's all fine and good. But at the end of the day, it's really just more or less a guess that you had. So I've learned my lesson the hard way in trying to play earnings before the reports. I always think that you're better off just letting it play out, or you play the run-up going into it. But if you're just trying to guess on which way a stock's going to fall in terms of beats versus misses, it's really just a guessing game. So, that's always good to point out. And we'll continue to keep an eye on this American Express. It's not a horrible report, but again, a little bit loftier expectations around those all-time highs, and this simply didn't produce the numbers that would have been necessary to give it that next level.
Yeah, and the other thing too is I can't imagine anyone's trading any real size after hours in these things. It's probably, if I could look at the tape, I would guarantee it's a bunch of 100 lots going off. So you don't see anybody with 1,000 share lots going off.
Right. Like that guy in the wolf mask that was trading Apple after hours the one time.
I missed that video.
You never saw that video? It's pretty funny. I have no idea if it's real, but it's if anybody's out there, Google Apple after hours trading wolf mask, and you'll see what I'm talking about. It's an entertaining couple of minutes to watch.
Alright, so while we're waiting on a couple more earnings to roll out here, why don't we take a look at see some more leading groups today. We had the semiconductors, which looked like they're back up at their fresh July highs here. Sorry, pretty solid action going on there. They've been, they're in favor, for 1 month. They're out of favor another month. I mean, that's basically the way this trend has been going year to date. And it looks like they might actually be coming back in favor here, as a couple of their earnings are going to be coming out pretty soon. You could probably say the same here for the aerospace defense group. We highlighted this a few weeks ago, actually a week ago, I'm sorry, with strength in Lockheed Martin and Raytheon and General Dynamics and, of course, Boeing, all managing to lift off their late June lows and making a nice recovery effort here as of late. So definitely saw some nice solid strength going on there in the aerospace defense names. Back to the Jets ETF. This is the airline ETF. Again, this thing might be turning a corner here. Go figure. The airline sector, as underperforming as it has been, does look like it's potentially turning around thanks to those strong price reaction in United Airlines earnings today. Yep.
Scott, with that Jets, JETS, right? And
yep.
Not going in for the football joke here, but does that really have any volume in it? I'm just looking at it. I got like 0 volume in this thing from
0. That's a good point.
Well, not 0, but
a couple thousand
spotty
shares
at best. Yeah.
Yeah, I mean it's no SPY or QQQ, but for an ETF, it's usually around earnings season. This is when you see those ETFs pick up in volume, obviously, as there's some adjustments going on and stuff. So, yeah, it is what it is. A lot of these ETFs, you don't really need volume. They don't.
There's enough liquidity there for you.
Yeah, they generate it for you, so you don't have to really necessarily worry about the day-to-day volume activity that's going on.
All right, I'll close out here, so I'm just going to jump in on that one. Scott, I'll pop back in 2 seconds here.
All right, I'll cover with the initial reaction to the downside, it looks like. Slumping about 4% down to that 46-45 area. Take a look at the chart there. This is the one that we said was just kind of in a tight, narrow consolidation. Really needed to get back above the 250-day moving average, above 48 here. It doesn't look like it's getting the job done.
So, yeah, I mean, the quarter itself was pretty good, but their outlook is not looking great. Just seeing they updated their adjusted EBITDA projections to 3.2 billion. The prior was 3.5 to 3.7. So, again, this kind of leads to what I was talking about in terms of the steel names, where I'm curious just to see what kind of impact on the outlook some of these trade tariffs have. Certainly a great quarter for the company with a nice 20-cent beat on the bottom line. They outpaced on revenues, but a little bit further weakness coming in here. I'm going to take a quick look through the release, see if I can find any commentary on tariffs in it.
Cool. Alright, so moving right along, obviously with transports turning higher and aerospace also turning higher, that's going to actually give a boost to industrials. So industrials actually doing a little bit of a new July high here, getting back above resistance levels today at that 74 level, trying to get back above the 250-day moving averages. Still kind of underperforming and slumping for the year. So there is a concern there, but it does look like it's coming back in favor here with a little bit of rotation going on in the underlying sectors. Metals and mining, they were doing pretty well today. We did see a little bit of a boost in steel stocks, like we said. Nucor should be coming out, I believe, tomorrow morning with its earnings report.
Hey, Scott, just as a heads up for that, Alcoa lowering the EBITDA outlook. The primary reason for that was they have a new full-year forecast for current market prices, also tariffs on imported aluminum, increased energy costs, and some operational impacts. In particular, Alcoa notes they incurred $15 million of costs of tariffs on imports from its foreign operations for U.S. sale. Alcoa imports were primarily from Canada, where, of course, the U.S. government Section 232 put that tariff on Canada. So, seeing some of the negative impacts from the recently announced tariffs. So, certainly something that we're going to want to continue to keep an eye out on. The company continues to project its full year 2018 global deficit for both aluminum and alumina, which should be positive for pricing there. In fact, they're expecting a larger global deficit in aluminum to between 1.1 million and 1.5 million metric tons. Their prior estimate for this was 600,000 to 1 million metric tons. Global aluminum demand for Alcoa remains unchanged, projected to be at 4.25 to 5.25%. So, the outlook in the markets seemed pretty positive. I guess it's just some of the costs that are weighing on the EBITDA outlook there that really provided the initial selling in Alcoa. It's coming down to that 46 area, not really seeing much support until that 44, 45 level. But at this point, I would expect that to hold today based on some of this commentary that we're seeing here. Obviously, a little bit of concern going in on the tariffs, but the uptick in costs seems to be coming also a lot from those higher energy costs, which is something else to keep in mind for the steel producers. But the tariffs aren't having a huge impact just yet at the moment.
Okay. Alright, going back to the sector action today, we did have pretty solid gains, another continuation, follow-through, whatever you want to call it, in financials. So nice upside potential there. Take a look at this XLF chart. We do have that multi-month, year-to-date downtrend line being probed here. XLF is getting back above its 200-day moving average, which is a constructive sign. It's just going to put everything on the radar, puts a lot more of a bullish spin on the space as it goes forward. Looks like the XLF's next resistance level is going to be around 2850 based upon that late March bearish gap. So something to keep track of. Hopefully, if you've been trading and you've been listening to us, you got along something somewhere in the financial space, as we've been pretty bullish on the group here throughout all of July. Whether it was JP Morgan or Goldman Sachs, or whether it was one of the ETFs, I think multiple analysts and traders have come on and either taken trades in them or jumped on board them leading up to these earnings reports, and the response so far has been quite strong. And if you missed it, Gavin and Jim were on earlier this morning discussing the reactions to the earnings reports and the ones that were really kind of outstanding. And you can search under the event ticker EVENT to see that discussion that was recorded earlier, and there's also a nice table associated under EVENT as well, where Gavin laid it out really nice in a comparison basis. I believe he did like Morgan Stanley the best out of all the names. So
yes, Scott. Just for a follow-up on that, Morgan Stanley I liked from an investment standpoint, okay, but I still think Goldman's the best trading vehicle, which I know you have a long in. Just because Morgan Stanley just has a little bit more heavier lifting to go through and get a little bit higher here in the short term. Where Goldman, there just seems to be a little bit less resistance, and the valuation's a little bit more attractive from a shorter term angle. But Morgan Stanley's just been producing so well the last 3 years that just Gorman's doing a great job there, and the entire that brand just looks like it's really set to just kind of move to that next level.
That's good to know. Good to know. Yeah, Goldman's just the more volatile name, being a $230 stock. It's I believe it's part of the Dow last I checked, and yeah, just it's a $4 average daily range. So you just definitely get some nice movement and activity out of it. If it's too high price, you can always go with J.P. Morgan. It's a nice one too. All right, moving right along. We got software stocks acting really great here. Retail seems to be holding up okay. Energy stocks, really interesting chart pattern. I highlighted this earlier today, right before the inventory data came out. I basically stated that there was a critical support level coming into play for the XLE, right there around 74. Price was slumping down to fresh July lows, and it had this support level right there that it was really just necessary for it to hold. Otherwise, it could have just cracked lower and just been, completely selling off. It was somewhat similar behavior going on in the OIH, right around that mid $25 area. It just basically sidestepped a complete disaster today, these energy stocks. And then the XOP was another ETF that I was tracking here, sliding right below its 50-day moving average, coming down to a multi-week uptrend line, key support level right around $42, $41, and again, it just managed to sidestep a complete disaster here. So does that mean that they're ready for a bounce? Yeah, it looks like it. I mean, crude oil, we'll take a look at the USO chart, had some pretty good action today. Really heavy volume yesterday, so usually when you see heavy volume spikes in a chart without a wide range bar, it tends to mean that there's a shifting of shifting control in the stock. A heavy seller shifted over to somebody that really wanted to step up and buy. And those tend to be... it could be vice versa as well. Obviously, it could be a more bearish person getting involved. But yeah,
Hey,
gap
Scott,
there.
yeah, sorry. eBay's out. Revenue miss leading to a quick dip in the name, but we've seen that obviously. A little bit of a whippy move down to that 35.50 support area, and now bouncing back. I don't know the volume is meaningful enough to really count that as a big sell-off by any stretch. I've seen it immediately bounce back. Just taking a quick look at everything, as I noted, revenue a little light of expectations, 2-cent beat on the bottom line there. Looking for the gross merchandise growth, which was a concern. That was up 10% versus the prior year quarter. I got to double check on it. I'm not sure what the expectations were, but that seems like a decent number given some of the concerns that were around and how beat up this is. Active buyers were up 4% too, which again is a decent number for them. So I'm not sure that early selling is going to be warranted. Looking around for their guidance, taking a look at Q3, revenue of 2.64 to 2.69. That looks to be a little light. Earnings per share, 54 to 56 cents. Generally in line to a little bit light. Full year earnings is revenues 10.75 to 10.85, which is below consensus. And then their non-GAAP earnings per share of 228 to 232, slightly above. Not loving the guidance here. Stock's basically back to break even, and probably for good reason. This is kind of a difficult quarter to figure out given some of the mixes. I'd say mixed bag, but considering that expectations were low, that's not necessarily a negative. Whether or not it's enough to break this out of the downward trend, I definitely question that. I think that we could see this bump into some resistance at that 38 level perhaps. I don't know. I'd let this one play out. I wouldn't be trying to lean too heavily one way or the other on eBay, as we'll kind of let this one settle itself out and figure which direction it wants to go.
Yeah, I agree. I'm pretty impressed on how it managed to hold that late June, early July low right at the mid 35s. And pretty hefty volume too came flying in to defend this stock down at below the $36 level. But overall, like we said, it really kind of needs to get back above that 38, 39 resistance area if there's going to be any sort of turnaround play.
Yeah, and like I said, just a simple mixed bag here. I think that guidance will certainly garner plenty of attention. The revenue miss too is of concern, but as you say, you want to watch price action here, and not really seeing a lot of people heading to the exits just at the moment. I mean, if I had to take a trade, I would think that we'd see a move back down to that 35 area, but I don't feel confident enough to really go out and take a position myself at the moment. I'd rather see this play out a little bit first.
Yeah, I hear you. Just so in case anybody's not familiar with rather than using the in-play page, you can always just go to the calendars drop-down menu, click on earnings results, and that's going to show you all the results for the current day. If you want to see yesterday, that you click on that link there. You want to see tomorrow, this week, or future weeks, feel free to click on that. But I like to just scroll down here, and it tells me how many names have already been reported. Now this is not going to be, this is a little bit further delayed. Obviously, if you want the speed, you pay attention to in play, because then somebody has to grab those numbers and then upload them into this calendar here. But overall, just a nice quick summary. If you just looking to see how earnings have stack up to each other. Usually, I like to look at the earnings surprises. So it's pretty impressive that I think whether it's above or below consensus. So seeing United Rentals and Alcoa and this Data Watch and Canadian Pacific and IBM all kind of surprise the consensus. And then you can always just come over here and see year-to-year revenue, which is always a pretty significant number, and then guidance, whether it was up or down or flat for the quarter or for the year. So pretty interesting stuff going on there overall. If you want a little bit more in-depth, you can always just click on this little plus sign right next to those the company name, and if you give it just a second to load in there, because there is a couple lines of information that is loaded up there, you get more of the summary. So you click on I clicked on the plus sign, and here I could just see United Rentals, how they beat, what happened there. I can see a little bit of a history, the last 4 quarters, just for a comparison basis. I can see the guidance for the last 4 quarters, and I can also see the last 4 to 5 analyst or brokerage up actions or upgrades or downgrades on the stock. So just a little tidbit there. If you're new to the site and you want a little bit more in-depth information, you can get it there underneath the calendars and earnings results, as opposed to scrolling through in play. I do see that CCI was actually
Yeah, I was just going to jump in there, Scott, and run through that. Their earnings are out. Not the greatest results. They did raise their outlook for FY 2018. However, their Q3 guidance is a little bit light. Not really seeing much of a reaction in the stock. Revenues were up 35% year over year, net income up 61% year over year, so that's certainly encouraging there. Not really seeing anything that's sticking out. We have that AMT as a 5G play, and the CCI is certainly in there, but we just really haven't seen the tailwind from that just yet. So we continue to look for that. I mean, this is a decent quarter. It's an uneventful one, and we're not really seeing the stock move all that much in it, and probably for pretty good reason too. We'll continue to monitor this action, and of course how this reflects in that AMT announcement. In terms of this, the small cells, a couple of comments in the in the report on that, but they don't really break out that activity just yet. So, it's something we'll keep an eye out for on the conference call. Do a run through the transcript tomorrow and see if there's any meaningful commentary on that sector. But overall, not looking at this to be much of a mover at all. So, we'll just continue to monitor it. That's pretty much all the big ones. If we want to cut it out, I think we can. Gives us just about a nice even hour here. You want to sign off for him, then I'll stop this and set the recording.
right, so we think that pretty much wraps up for this afternoon's earnings talk. I think we've hit all the major ones that we wanted to discuss, and looks like most of them did come out there. So we're just a matter of just closing up shop here and waiting for those other names to come out tomorrow morning. Let's just take a quick look at them again before we sign off. Go to the earnings calendar. And it looks like go to tomorrow. Give it a second to load up. And a few of the names that we hit on today was going to be Danaher, D-H-R. We do have Domino's Pizza out tomorrow, DPZ. Dover, D-O-V, and Industrial might be a mover. We do have a couple banks here, EWBC and FitB. Genuine Auto Parts, so that's an interesting one there. KeyCorp, a bank. Nucor, we highlighted that one earlier. Philip Morris, PM, another one that we highlighted. SAP, all-time new highs, so that's going to be an interesting one. Taiwan Semiconductor, that should be pretty interesting too, to see how that semiconductors respond to that one. Travelers, and then finally we have Union Pacific, see if it can capture a bid in response to the recent strong strength in the transport space and the industrial space. So overall, that's today's markets holding up pretty solid here. You have the S&P closing up here right around fresh. What do we got there? About 5 or 6 month highs. We got the Dow still lagging overall in the year, but trying to get back up towards those June highs and playing catch up. Obviously, we have the Nasdaq pacing the way higher with leadership in internet and technology and software names, a couple semiconductors, and then we have mid caps and small caps. Really strong year to date, but a little bit hesitation going on here as all the focus is on these larger cap earnings reports. But it does look like in due time they're going to get pretty volatile as more names are scheduled to come out in coming weeks. Note that it is an expiration this Friday. This is going to be July's 3rd Friday, so it's expiration day. Tend to see a little bit of gaming action going on around key strike prices, so just to be careful getting too aggressively long and short on those days. It just seems like, in my experience, that expiration is not typically fun days to trade. So too many different agendas going on, if you know what I mean. Anyway, with that said, hope everyone has a great evening, and we'll be back on the air tomorrow morning.